Welcome to my workspace. Today, I want us to kind of look at certain things. I want us to pay attention to some things that I think is very valuable. Uh, Most of us, or some of us, might have kind of noticed it or kind of been through that process. And I think it affects our way of acting, of decision making, of how we trade or invest our money. There is something that I call it sentimental value. There is a sentimental value stock, and there's also real value stock. So sometimes we kind of take action, we take decision based on our sentiment, not really doing our research to really look into what is actually the value of this stock. And we take those decisions based on hope. We're hoping it's gonna be okay, but we didn't do our research to really see the actual value of a stock. This is something that is concerning to me because I have made a mistake doing that, and then I've learned through it. And I think for us not to brush it away or not to put it under the carpet, it is very fundamental for us to kind of be aware of that. And that is why I'm bringing it up right now. If we don't pay attention to it, then we are just, making a decision or investing our money as if we are gambling. Most of us will have probably go through it or experience it at certain point in time. But I want us now, the family, to kind of pay attention to it, not to just buy a stock or not to be sentimental about a stock. It's not. There are thousands of stocks. There are thousands of companies that offer shares and stocks for in the on the exchange. So if you see a share or a stock that is not really doing, that when you do your research, it's not really lifting, it's not living up to the standard of your standard. Don't be sentiment with it. Let it go. Leave it alone. Go and do other research. Go and do other research on other companies that will give you the real value. Now, what is the real value of a stock? What is the real value of a company? Well, if you divide the market cap, the market capitalization of a company, and you divide it by the total earning of that company, then you can kind of get the real value of that company. Most of us, we don't do that. We just, I'm guilty of that too. At one point, I am guilty of that. I trade or I invest based on hope. I hope it's gonna go up. If a stock goes up drastically, there's a reason for it. If it drop down drastically, there's a reason for it. So before you put your money into it, you need to know, why does this stock go up this fast? Why does it go up this much? Before you put your money into it. And if it goes down, you need to know, why does this stock goes really down? You want to know before you put your money into it. I have done it, and mostly I learned through it to say, wow. So on this video, I'm trying to let us be aware that every stock price that you see, there is an action and reaction. Something bring it up drastically. And if it goes down, that means something happened, some kind of news, something happened that brings it down. Don't be sentimental in your buying. Sentimental value is not the value that we want to put our money into. We want the real value of a company. Now, let me say this. Sometimes people evaluate a company based on their future earning. Like, oh, this company is bringing out something new, even though the value right now, let's for example, $10. But if this company has a potential of making $20 in future. So people put money into that company with the hope that is going to make $20 in future. Now, so when you divide the market cap of that company with the total earning, the real value is not going to match the cost of that stock. That is different. Not many company does that. And even when you do that, you are still taking a chance because you are buying something not based on the value of that company. You are buying it based on the sentiment. So I called it sentimental value. Sentimental value. It is something that we have to be really careful about because when you spending that money based on what you feel it, you're not buying it based on the chart, on the results of your research, or based on the fundamental of the company, or based on information or product that they carry. You are just buying it based on the sentiment that you have about that company. It's a risk. It's a dangerous risk. So I am bringing this for us to see that there's a difference between a real value and the sentimental value. I call it sentimental value. Don't buy or invest your money based on sentimental value. For example, let me say this quickly. So let's say a car, a Ferrari, or a Lamborghini, or Rolls Royce. Let's say a Rolls Royce is $500,000. And also we have Toyota Camry. Camry is $40,000 or $30,000. Okay, the sentimental value of an automobile. So let's look at what is the service. What is the automobile supposed to do? A car supposed to be able to move you from point A to point B, right? So a Rolls Royce will move you from point A to point B. Likewise, Camry. But Rolls Royce is $500,000, and and Camry is $30,000 or 40 or whatever it is. Far away, far apart, but they both deliver the same service, the same service. So if you buy a Camry, it's gonna do the same thing that Rolls Royce is gonna do, but the sentimental value are different. The sentimental value are different. If it's based on the real value or the real service that they both render, the values should be close together, really close together. But because of the sentimental value that we put, which is based on the beholder, is based on the beholder. The price of something is the amount that you or I ready to pay for it. So in our dealing, in our buying, investing stocks and all that, let's be careful when you buy this stock. Are you buying the sentimental value of this company, or you buying the real value of this company? Let me show you something that I've said earlier, but I just want to show it briefly for us to be able to see and understand what I am talking about. Okay, so this is like I said earlier, the market kind of goes down today based on the Fed meeting yesterday. The signal that they might be able to there's possibility they're going to increase the rate one more time before the end of the year, or possibly even twice before the end of the year. So based on that news, based on that sentiment, that feeling, that possibility, the stock market kind of went down. The Dow Jones went down 370 points. S&P goes down by 72 points, and Nasdaq go down by 245 points. Now, because you see your stock, you see your Tesla going down by $6, you shouldn't be sentimental and scared and go sell it. Okay, it is just based on the general sentiment that, the stock market might go down, so everybody's trying to to do something. So don't put sentiment into your action. Always make sure that you use chart, that you use data, that you use fundamental to make your trading, your investments decision. Chart, trading, and also fundamental of their company as a basic for your action or for your investment. Don't just use sentiment. So that's what I'm talking about sentimental, value of a company. We all know that, Tesla is a good company. They have a high potential. So look at it today. It went down by $6.89 today, just based on that. Now, even though there's no news, there's no reason, there's nothing in particular that happens to Tesla as a company. There's nothing that happened to it as a company, but that don't stop the stock from going down. See, the stock to still going down because people are sentiment about it. Now, this the Tesla now is two 55 $255. Okay. Now let's look at what the analyst forecast for Tesla as a value. So look at it. It's 270, but if you look at it, it's now 255. So the analysts expect the target price for Tesla possibly in the next 12 months is 270. So we can say that possibly the actual value of it might be between 260 to 275 280. I'm just bringing this up for us that we should not be doing things on impulse. You should be taking action based on our research fundamental and also our chart. This affect all the companies today. Everything went down today, and Tesla is not excluded. It's pays its own share of that news. So in essence, what I'm trying to say is this: when you are making that decision, when you are making that move, you have to answer yourself. You have to ask yourself, am I making this move based on a sentimental value of this company, or am I making this move based on the real value of this company? I think if we are able to ask ourselves that question and answer ourselves that question, then it would help us to be able to make our next move when necessary. No, if you buy it based on the company going to be more valuable in future, then if something goes wrong, then you can make it changes right quick. But it's not advisable for us to be able to buy things based on the sentimental value. It should be focused basically on the real value of the company. This is what I think it will help us to keep our money and also to build that generational wealth. This is my thought. Of course, nobody knows it all. I do not know it all, but I would like to read your comment. I would like to read your own opinion. I would like to learn from you also. This is why this platform is here. I would like you to comment below. Now, if this is your first time on this channel and you have not subscribed to this channel, I'm requiring, I'm pleading with you to support this channel so that we can continue to bring different content that I believe will help us as people, as a community, for us to go to the next level financially. Thank you very much. Share this video, like, and subscribe to the channel. Thank you and have a wonderful day.